And today, myself, CA Dr. Alok Garg, so I'm going to take a session which is a query session on four Ind AS, Ind AS 7, Ind AS 8, Ind AS 10, and Ind AS 34. So, students, I believe you all have gone through with the recorded classes on Ind AS 7, 8, 10, and 34. I have taken Ind AS 7 and 34 in the last batch, and Mr. Kapileshwar Bhalla ji has taken Ind AS 8 and 10 in the last batch. And you guys got a sufficient time to gone through with the recorded classes, and that is why ICAI has conducted this query session of FR after almost a week, right? So that you will have a time to listen the recorded classes, to read the content, and to practice the content, right? So technically today is the query session on these four standards. And students, I'll just touch upon the concepts. I'll brief the concepts and then I'll take query one by one, right? So first of all, I'll start Ind AS 7, which is statement of cash flows. It's a small standard. Then I'll jump to Ind AS 8, which is accounting policy, changes in accounting estimate and correction of errors. Then Ind AS 10, events occurring after reporting date, not balance sheet date, reporting date. And Ind AS 34, interim financial reporting. So these are the four standards which I'm going to cover today briefly, right? And I'll take the query. If you have any query with respect to this standard, I will be happy to address or resolve the query, right? So students, the format which I want to keep is, let's say when I complete Ind AS 7, I would like to have a query on Ind AS 7, right? I'll resolve those query and then I'll move to Ind AS 8, okay? So once again, a very good morning and warm welcome to all of you. First of all, let's discuss about the cash flow statement, statement of cash flows. You know, the title is not cash flow statement. The title is statement of cash flows. When I took the first class or first session and I talk about overview and roadmap for implementation of Ind AS, I talk about Ind AS 1, presentation of financial statement. When I talk about Ind AS 1, presentation of financial statement, so Ind AS 1 is talking about the financial statement. And there are five components of the financial statement: balance sheet, right? And the balance sheet format was given, the balance sheet structure was given in Ind AS 1 as well as the format is given in Schedule 3. Okay. And if I talk about profit and loss in the same manner, structure was given in Ind AS 1 and format was given in Schedule 3. When I talk about statement of changes in equity, structure was given in Ind AS 1 and format is given in Schedule 3, Division 2 of Schedule 3. But friends, when we move to cash flow, right, statement of cash flow, Ind AS 1 says that I don't know about the statement of cash flows since my boundary is presentation of financial statement, and that is why I kept cash flow as a component of the financial statement. But if you want to understand cash flow statement, please refer Ind AS 7, right? So Ind AS 1 straight away take this Ind AS, take this cash flow statement to Ind AS 7, right? So Ind AS 7 talks about cash flow statement. Sir, what about Schedule 3? As I already told you in last three classes, that Schedule 3 does not talks about the format or structure of the cash flow statement. Schedule 3 also says that, my dear students, if you want to prepare a cash flow statement, and not if you want to prepare, you have to prepare. As a part of the complete set of financial statement, you have to refer Ind AS 7 and then notes to accounts. So one thing is very much clear that cash flow statement is one of the important component of the financial statement, right? Now, sir, if I talk about the entire financial statement, balance sheet shows you a statement of financial position. Profit and loss shows you statement of financial performance, financial performance. A statement of changes in equity also shows you financial performance by way of, movement in reserves and surpluses. But cash flow is one which always shows you the liquidity performance of the entity. And I can give you an example to make you guys understand, And this is one of the example which I have taken in my last batch recorded class. Let's say there is a company, right? There is a company which is having a sales of rupees 100 crores, right? And the entire 100 crore sale is on credit basis, and the credit is for more than 1 year. And the credit is for more than 1 year, right? Now, students, what happened? The sales is on a credit basis and it is for more than 1 year. So in the entire year, the company has not received any amount of collection of cash, right? But since we are preparing our books of accounts on an accrual basis, so we have to record these sales, right, on an accrual basis. You all agree with me? Yes, we have to record our sales on an accrual basis. Now, friends, 100 crore of top line was recorded in the P&L account, and the company has a 60 crore rupees of expenses, and these expenses belongs to salary, purchases of goods and services, right? Electricity expenses, rental expenses, telephone expenses, traveling and conveyance, and other expenses. So, friends, this 60 crore is kind of a cash basis. Cash basis means every month the company is giving salary to their employees. Otherwise, employees will not work. Every month the company has to deposit or pay the electricity bill. Otherwise, electricity will not be there. So, technically speaking, this 60 crore rupees of expenses was paid during the year. But 100 crore rupees of collection was not made during the year. So, friends, looking at the profitability, the bottom line of the company is 40 crores, 40% of the profit. And when someone was looking at P&L, he was just saying, wow, wow, 40% profit margin, great P&L, right? Absolutely great. I hope my PPT is visible to everyone. Is it visible to everyone? My PPT?
Yes, sir.
Okay. So, friends, P&L is absolutely great, but when you go to the balance sheet is also great. You will have a debtors of rupees 100 crore, and this profit will move to retained earning. You have a positive reserves and surplus. You have a positive debtors, right? So balance sheet P&L you will be happy to see. But the true story will come into play when you see the cash flow statement, right? When you go to the cash flow statement and you understood that the entire cash flow statement has to be bifurcated into three parts: cash flow from operating activity, cash flow from investing activity, cash flow from financing activity. For any business, cash flow statement has to be bifurcated into three parts: operating activity, investing activity, financing activity. Now, friends, operating activity means what you have generated or what you have loosed as a cash from your operations, right? And friends, cash flow statement is a statement which has to be prepared on a cash basis. Means it reflects the cash story. It reflects the cash story. So when you go to the cash flow from operating activity, so what you have collected from the sales, it's zero. What you have paid as an expense, it is 60 crores rupees of cash. So you will find your cash flow from operating activity is zero. What you have paid as an expense, it is 60 crores rupees of cash. So what you have collected from the sales, it is 60 crores rupees of cash. हाँ वो पावर कट हो गया था, सॉरी. Yeah, I hope I'm audible now. Am I audible now? Yeah. So I was saying, when you look at the cash flow from operating activity, you will find that the cash collected from customer is zero and the cash paid to vendor is 60 crores. So the cash flow from operating activity is negative. What is a cash flow from operating activities? It is a revenue producing activity. It is the main activity of the entity from where the entity is generating a cash, right? From where the entity is generating a cash. So it means from the main business, the entity is not able to generate the sufficient cash to meet the expenses even, right? So then how this 60 crore has been mitigated, from where the company has got the money to generate or to mitigate or to cover these expenses? Probably the company has sold some assets, the company has disposed of or liquidated some investment. So probably you will find the positive cash flow in the investing activities. Probably the company has taken a loan. So might be you will be finding a positive cash flow from financing activity in terms of taking a loan. So investing activity or financing activity is supporting to cover the cash outflow from operating activities. So friends, cash flow statement is an important measure to understand the business performance, right, from the liquidity standpoint of view, whether the company is able to generate the cash or the company is not able to generate that cash. For example, in many companies, the P&L is negative, right? Still, investors are investing money into that company. Why? So, in profit and loss account, there are so many non-cash expenses also. What could be the non-cash expenses? Let's say there is a depreciation expenses, there is a impairment expenses, there is a unrealized foreign exchange, right? A company which has a lot of foreign exposure, right? And the way the dollar is appreciating and the rupee is depreciating, the company will have a lot of unrealized foreign exchange in its books of accounts, right? Depreciation, again, it's a notional entry, it's a non-cash entry. So friends, probably these three items put together will make the P&L negative. But when you go to the cash flow statement, you will find the company's cash flow from operating activity is bit positive, right? And this indicates the investor to pump the money into that company if they are looking, the future is bright in that company, right, friends? So cash flow statement is an important aspect where you need to look at cash flow from operating activities, cash flow from investing activities, and cash flow from financing activity, right? So you will find the operating activity, investing activity, financing activity put together. It will give you the cash cash flow changes. It will give you the cash changes during the period from all these activities. That what is my net cash changes. And when you add this net cash changes to the opening cash and cash equivalent, it will give you the closing cash and cash equivalent, which should tally with the balance sheet, right? Is that clear, friends? Now, sir, what is meant by cash and cash equivalent? So cash means liquid cash, hard cash, right? Cash in hand, right? Or demand deposits. This is cash. What is meant by equivalent to cash? Short-term, highly liquid investment that are readily convertible to non-amount of cash, which are subject to an insignificant risk of change in value. So I will read this definition into four parts. Short-term. What is meant by short-term? Short-term is 3 months. Any asset which can be realized into cash within a period of 3 months is known as a short-term. Sir, any asset, yes, highly liquid, but that asset should be highly liquid investment, right? That asset should be highly liquid investment. Inventory is not a cash equivalent, right? You cannot say inventory is highly liquid, okay? But investment in share, market will open on Monday. You have investment in equity shares. You can sell off those shares in the market. So investment in share is a highly liquid investment if it is a listed shares. Short-term, highly liquid investment, which are readily convertible into non-amount of cash, and which is subject to insignificant risk of change in value. A company has invested 1,000 shares of Infosys in the company has invested 1,000 shares of Infosys. The company has taken 1,000 shares of Infosys Limited. Of course, if the company wants to sell these shares tomorrow, the company will be able to sell tomorrow, provided tomorrow will be a working day. So is it short term? Answer is yes. Is it highly liquid investment? Answer is yes. But can I say investment in Infosys equity is a cash equivalent? The first two conditions are meeting. I have told you. But can I say that investment in equity shares of Infosys Limited is considered as a highly liquid investment? Is considered as a cash equivalent? Brakesh is saying no. Okay. Why? Because I don't know what money I am going to fetch tomorrow by selling an Infosys share. It could be much higher, it could be much lower. There could be 20% lower circuit in the shares of Infosys, or there could be 20% upper circuit in the shares of Infosys, right? It's not a known amount, and that is why it is not a cash equivalent, it is a short-term investment. Right, friends? So we discussed the cash and cash equivalent part. If you have gone through with the recorded video, I have spent a sufficient amount of time taking so many examples on this cash and cash equivalent. Now, friends, in Ind AS 7, and this is a comparison with AS 3, Accounting Standard 3, it says that bank overdraft. Many companies are taking a bank overdraft, and bank overdraft is nothing, it's a current account overdrawn balances, like that. So bank overdraft is normally used as a overdrawn facility. It is normally used as a working capital arrangement. Okay. Let's say the company has a current account with State Bank of India. The company has, the company has only 1 lakh rupees in their current account, but they have a overdrawn facility they have taken from the State Bank of India. And the company has paid a check to the vendor for 1,25,000 rupees. The vendor has, presented the check of 1,25,000 rupees, but the company has only 1 lakh rupees in its bank account. But even in that case, the check will not get dishonored. Why? Because this company has a bank OD facility, right? At the end of the day, the bank statement will show 25,000 rupees of bank OD loan, bank OD facility, right? So what is this bank OD facility? As per cash flow statement, Ind AS 7 says that if there is a bank overdraft, it will be considered as a part of cash in cash equivalent, right? Not in the balance sheet. In the balance sheet, this bank overdraft will go as a short-term borrowing. But in cash flow statement, you have to net off. For example, you have some cash equivalent of, let's say, 50,000 rupees. Okay. And you have this bank overdraft of 25,000 rupees. In your statement of cash flow, you have to net off this 50,000 rupees, this 25,000 rupees from the 50,000 rupees, right? In your balance sheet, cash and cash equivalent is 50,000, short-term borrowing is 25,000. But in your cash flow statement, your cash and cash equivalent is 25,000 only, which is net of bank OD, right? So this is one of the difference. I have also covered the case study on cash and cash equivalent in my session. And this case study is from ICAI study material. You must have gone through with this case study. For example, if you will see fixed deposit with HDFC, right? 10% original term was for 2 years, but due for maturity on 30th June 2001, right? This is 31st March 2001. Friends, the standard says that for fixed deposits, cash and cash equivalent will cover only those fixed deposit which has a original maturity period of 3 months. Original maturity period. So in this case, if I take the second example, the original term was not 3 months, it was 2 years. But on the balance sheet date, the remaining term is 3 months only. So it is not a cash and cash equivalent. It will be other financial asset under current asset, right? So it will be current asset, but not a cash and cash equivalent. Clear, friends? Is that clear? So bank overdraft of SBI Fort branch. This is again a part of cash and cash equivalent. I'll not covering each and every question because the rebuttable presumption is you guys have gone through all the recorded videos, right? So this is the answer which is given. And if you see the first one, fixed deposit with State Bank of India, 12% 3-year maturity on 1st January 2004. It is a long term. It is not a cash and cash. Right? We discussed these three items, activity, investing activity, and financing activity. Just reiterate, operating activity is nothing. It's a principal revenue producing activity of the entity. Principal revenue producing activity of the entity, right? What is your investing activity? Sir, what should be the example of operating activity? Your cash collected from customer, from sales, your cash received from debtors, your cash paid to supplier, employee, vendors, right? Income taxes paid. So these are the examples of your cash flow from operating activity. Okay. Then, sir, what is the example of investing activity? Investing activity are those activity which results in acquisition and disposal of long-term assets and other investments which is not a part of cash and cash equivalent, right? Acquisition and disposal of long-term assets. The company has purchased machinery. So purchase of machinery is not an operating activity. Purchase of machinery, it's a long-term asset. So this will form part of your investing activity, right? The company has deposited money into the fixed deposit with State Bank for a period of 2 years. So again, it is an investment which is not a cash equivalent. It will it will go to your investing activity. The company has received dividend from the investment it has made. It is an investing activity. The company has received interest on fixed deposit. It is an investing activity, right? Financing activity. Financing activity is an activity which is directly related to the capital structure of the company. What is meant by capital structure? Equity and debt. For example, the company is raising money. So how can a company raise money? Student, can you tell me how a company will raise money? How a company will raise money? Either through equity share capital or through debt. Right? These are the two forms. These are the two forms of raising money, two forms of finance, either equity or debt. Right, Abrikesh? Now, if a company is raising equity, for example, issue of shares, it is a financing activity. For example, the company is going to do a buyback, like TCS has done a buyback few months ago. So what is that? That is a payment of share capital. That is a buyback, and it will also form part of your financing activity. So financing activity is an activity which is relating to the capital structure. Dividend paid, dividend received. I have told you investing activity, but dividend paid, it is a financing activity, right? It is a financing activity. Term loan taken, it is a financing activity. Loan repaid, it is a financing activity. Okay. So friends, these were the example of, and this was the concept of operating activity, investing activity, and financing activity. Okay. And this is the examples which are there in the slides. This is the operating cash flows case study or illustration or example which is there on the screen. For example, this is a company which this company is into the business of trading of mobile phones, right? And the ask of the question is, please identify the operating cash flows. Receipt from sale of mobile phones. Is it operating cash flow? Answer is yes. Purchases of mobile phone from various companies. Again, it is an example of cash flow, right? Operating cash flow. Employee expenses paid. It is an example of operating cash flow. Advertisement expenses paid. Operating cash flow. Credit sales of mobile. Will you receive any money from the credit sales of mobile? There is no operating cash flows. पैसा ही नहीं आया ना. Miscellaneous charges received from customer for repair of mobile. It is again a trading activity, directly related activity. So this is again an operating cash flow. Loss due to decrease in market value of the closing stock of old mobile phone. The company was keeping an inventory of old iPhone 12 or iPhone 11, and of course, the price of iPhone 11 or iPhone 12 has got reduced, right? Has got dropped. So in that case, this is only a notional market fluctuation. This is not an actual cash flow. So this is a non-cash item, right? So these are few examples of operating cash flows. Profit on sale of old computer and printer in exchange of new laptop and printer. In exchange of new laptop and printer, right? So the company is selling old computer and printer, and the company is getting new laptop and printer. Is it a operating cash flow? Answer is no. The company is exchanging asset. But if the company is paying something in addition to giving the old computer and laptop, that additional money is your operating cash flow. And right, is that clear? Is that clear, friend? So any question so far? Any question so far? Sorry, just to add on, profit on sale of old computer. So it's a fixed asset, right? So the receipt from the fixed asset will go into that investing activity. Okay. Operating activity, there were two methods: direct method and indirect method. What is meant by direct method? Direct method is like a direct cash account. Okay. So cash collected from sales, cash collected from debtors. Okay. Less cash paid to supplier, vendor, creditor. Less cash paid to employees, less income taxes paid. So this method will give you the direct cash. What is your direct cash from operating activity? But friends, you are preparing your balance sheet and P&L on an accrual basis, right? So your balance sheet and P&L is on accrual basis, and your P&L will gives you profit before tax and profit after tax as a bottom line. And in this profit before tax or after tax, lot of non-cash item, lot of these kind of items are included. So in our real life, we are following indirect method of preparation of cash flow, where we used to start with profit before tax, and we need to add back all the non-cash item, and we used to add back all the non-operating item. So we understood that there are three activity: operating activity, investing activity, financing activity, right? So let me show you the structure of the cash flow quickly, and please confirm if my file is visible. If you can see, this is my Excel file where cash flow operating activity is there in the statement of cash flow. Cash flow operating activity is there, right? Profit before tax. Started with profit before tax. It is a indirect method of cash. Then we have added or less non-cash item. जैसे what could be the non-cash item? Depreciation, impairment, unrealized forex. These are the non-cash items. Then we have added or deducted investing and financing activity item. Why? Because we are finding out cash flow from operating activity. And this investing and financing will go to the investing activity and financing activity. Example, interest received, interest paid. This will go to investing or financing. It will give you operating profit before changes in working capital. Then you have to adjust your changes in working capital. It will give you cash flow operation. Then you need to deduct income taxes paid. Then it will give you cash flow from operating activity. What you have done, you have taken the profit, right? And from the profit, you have adjusted all the non-cash item. You have adjusted all the non-operating item. Then you will find operating profit before changes in working capital. Now there are some movement in working capital also. For example, you have done some credit sales, right? And there is a opening debtor, there is a credit sales, there is a closing debtor. Okay. In your profit before tax, the entire sale is there, but now you have to adjust this because you have not received any money. So that is why the adjustment of changes in working capital is also required to reach at cash flow from operations. And then from cash flow from operation, when you deduct income taxes, it will give you cash flow from operating activity. As far as direct method and indirect method is concerned, only direct method and indirect method is applicable to operating activity. Investing activity and financing activity will always be on the direct method, right? On the direct method means what is my money received from selling of fixed asset or from purchasing of fixed asset? What is my actual money received from selling of fixed asset or actual money paid for purchasing of fixed asset? It will come here, right? It will come here, right, friends? So investing activity and financing activity is always on a direct basis. It is always on a direct method basis. Is that clear? Is that clear, friends? Raj is asking, sir, whether financial asset or other financial asset is trending in the non-current asset is taken financing or operating activity. Raj, you have to see. First of all, you have to see financial asset and other financial asset. What could be your financial asset? Your financial asset could be debtors, right? Your other financial asset could be, a security deposit which you have paid. Okay. So these kind of financial asset and other financial asset normally should be your operating activity. Should be your operating activity, right? For example, you have given money for purchase of machinery as an advance. It will form part of your capital advance, and capital advance will be your non-financial asset. So normally your financial asset will form part of your operating activity, right? Is that clear? Normally, sir, in other financial asset, there could be a fixed deposit, which is for a period of more than 1 year under non-current. Sir, whether it will be operating activity, answer is it will be investing activity. You remember the definition of investing activity I have told you? Investing activity are acquisition and disposal of long-term asset, acquisition and disposal of long-term asset, and 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 asset in addition to an investment which are not form part of cash equivalent, which are not form part of cash equivalent, right? So investment in fixed deposit for more than 3 months, right? It could be 1 year, it could be 2 year. What is it? It is your investment which is not a cash equivalent. So this investment in fixed deposit for more than 3 months will go to investing activity. Is that clear, Raj? But if it is a debtor, if it is a security deposit, it will go to operating activity. Raj, is that clear? Is that clear? When there is nothing in question about it. So Raj, if there is nothing in question about it, the breakup is not given, you are not aware about the item, please consider this is in operating activity, right? In that question, please consider this as an operating activity. Is that clear? Okay, so we discussed about investing activity, operating activity, investing activity, and financing activity, direct method and indirect method, right? There is a question which I have solved also in my recorded video in my last batch, and I'm sure that you guys have gone through it, right? Investing activity we discussed, and we have a case study or example of investing activity. Friends, friends. So Raj, you know what I've told. If the question is silent, okay, and your other financial assets, okay, or your financial asset which is non-current, okay. So it could be your asset which is directly related to your business activities, your main activities. Okay? So in that case, even though if you will take this in operating, in my view, if you will put the footnote to it, if you put the remarks to it, that in absence of any clarity in the question, we have considered this in operating activity. In my view, this will be correct. Okay. So the question has to solve, right? There is no guidance in black and white which is given in the standard, and that is why both the views may be acceptable. But again, you have to provide a footnote to this. You note to this saying that I have considered this in my operating activity in absence of any clarity or further granular level item in this particular asset. So both the views are there in industries. They are taking in operating activity as well. Right, Raj? So friends, financing activity we have discussed. There is a case study on this financing activity. Now, friends, you remember I have told you interest received is a investing activity. Interest paid is a financing activity. Dividend received is a investing activity. I have told you, remember? Now, what about if it is a financial institution? The job of financial institution is to provide money on loans, is to receive money as a deposits, right? So for the financial institution, for the banks, right? Interest received is not an investing activity. For the banks, interest received is an operating activity because this is the operation of the business. Interest paid, interest paid again for the bank is not a financing activity, it's an operating activity. Dividend received, it's an operating activity for the banks, right? And for the other entities, dividend received is a investing activity. So friends, interest received and interest paid, it's a normal revenue producing activity or main activity of a business. Main activity of a business. Okay. Main activity of the business. Friends, friends, if it is a main activity of the business for this bank, then interest received and interest paid will form part of your operating activity. But for all other entities, interest received will be investing activity, interest paid will be financing activity. Likewise, dividend. Bank also used to invest. Financial institution always used to invest in the shares of other companies as well or in the product of other companies, right? In that case, if the financial institution is receiving a dividend, it will always be operating activity for this financial institution, but for the other entities, it will be investing activities. Dividend paid. Sir, dividend paid will always be financing activity, be it a financial institution or be it other entities. Why? Why? Because you are right, Priyanshi, because dividend paid will always be on the share capital. To whom you will pay the dividend? Business will pay the dividend to whom? To whom? The business will pay the dividend to the shareholder, right? It will always be your financing activity. It will always be your financing activity, right? We discussed a case study on on the specific points we discussed, friends. Foreign currency transaction. If there is a impact of the foreign exchange on the cash and cash equivalent, which is held in foreign currency, it has to be shown separately as a reconciliation of cash and cash equivalent, right? It has to be shown separately as a reconciliation of cash and cash equivalent. Unrealized gains and losses arising from changes in foreign exchange rates are not cash flows, right? So friends, unrealized gains and losses, of course, it's a notional item. It is not a cash flow item. You cannot net off your inflow and outflow. Okay. For example, you have taken a loan from a bank, you have repaid a loan of another bank, right? So you cannot net off this inflow and outflow. Okay. You have to show this inflow and outflow separately so that user will be able to understand the substance of the transaction. Income tax cash flows. Friends, normally the standard says that, and the guidance which is there in the standard, income tax has to be shown with the respective item in operating, investing, and financing. For example, if there is a tax impact from operational item, it has to be operating activity. If there is a tax impact on the investing item, it has to be investing activity. If it is from financing item, it has to be financing activity. Sir, how you can say that? For example, the tax rate is 25% of the company. In P&L, the tax expense is one line item. The company has sold building. The company has sold building. Friends, proceeds from sale of building, is it a operating item, investing item, or financing item? Is it a operating item, investing item, or financing item? You are selling long-term asset. It is an investing item. When the company has sold building, the company is entitled to, or the company is obligated. The company is obligated to pay long-term capital gain tax, right? On this sale of building, if it is a long-term. If the company has to pay long-term capital gain tax on this building, because I'm aware that I have sold a building, right? And let's say I have to pay 10 lakh rupee of income tax on this sale of building. This 10 lakh has to be shown as an income taxes paid in the investing activity. Likewise, I have received a dividend. Likewise, I have paid a dividend. And friends, earlier when you were paying a dividend, there was a dividend distribution tax, right? So this dividend distribution tax is always on dividend, which is a financing activity item. So that tax has to be shown separately as a financing item. And the residual tax has to go to the operating activity. Sir, but if it is not possible to split or identify what is my investing related tax, what is my financing related tax, the standard permits you to show this entire income tax expense as one line item in your operating activity. It is allowed. That is okay if you take this in your operating activity. Non-cash transaction. The company has purchased a machinery and the company has issued equity shares in exchange. It is a non-cash item. It is a non-cash transaction, right? So it will not form part of your cash flow statement. It is not form part of your cash flow statement. It will be part of your disclosed. Acquisition or loss of control of subsidiary, right? Classified as investing cash. Classified as investing cash. For example, you have acquired a subsidiary. Okay. You have acquired a company. You have acquired a subsidiary. It is an investing cash. Or you have sold a subsidiary. It is again an investing cash. But there was a subsidiary where you have a control of 80%. Now you are selling 20% stake of that subsidiary. Still you are having a control. So why you are selling 20%? Probably you are in need of money. You are raising money. You are in a need of money. So friends, when there is a changes in the ownership interest in a subsidiary, which is not resulting in loss of control. Whenever you are selling a stake in subsidiary, but it is not resulting in loss of control, it has to be classified as financing cash. It has to be classified as financing activity, right? Is that clear? Foreign currency cash flows. Sir, if there is a foreign currency cash flow, then for example, you are generating cash flow in US dollar. Okay. You are getting money in US dollar. Standard says that you have to convert that foreign currency cash flow multiply by the rate on the date of the cash flow. This will give you the cash flow in your local currency, right? Sir, if I am converting foreign currency financial statement, and of course, there is a foreign currency cash flow statement. In that case, standard says that in that case, you can apply weighted average method during the period or the year to translate your foreign currency cash flow into your Indian currency, or let's say local currency, right? And this is an example of taxation on income which is there in my class. Last class means last recorded. There was some disclosure which is required for component of cash and cash equivalent, right? And this is again one of the example, right? There are other disclosures also, and these are the differences between Ind AS and accounting standard. For example, bank overdraft is typically a good difference between AS and Ind AS. In AS, this bank overdraft was never form part of your cash and cash equivalent. It will form part of your financing activity. Cash flow from extraordinary item, it does not exist in Ind AS, but in accounting standard, it has to be shown separately. Investing activity, more detailed guidance is there, presentation, more guidance is there. That's all on this cash flow statement, right? Now, please let me know if you have any question. I would be happy to answer your question on Ind AS 7 cash flow statement. Please ask if you have any question on cash flow statement. Yes. Which question, Raj? Just a minute. So Raj is saying, sir, in illustration number 11, it was clearly mentioned in operating, so it was taken there. Further, putting note would be enough, or I have to give alternative solution as well. In my wisdom, putting note is enough. In my wisdom, if nothing is there, and there is a dual practice. If the question is silent, it can be operating, it can be investing. Right? Any other question? Friends, if you want to unmute yourself, please unmute and ask question. Presentation of income taxes, addition initially and deducting later. Which amounts to be taken? I believe, Raj, you are talking about, let's say the company has provision for gratuity, right? And the provision for gratuity has to be deducted in tax on a cash basis when you are paying gratuity. Am I right? This is kind of a question which you are asking. So, sorry. हाँ, अनम्यूट कर सकते हैं आप स्टूडेंट को अगर उनका कोई क्वेश्चन है तो. So Raj, let's say the company has a provision for gratuity in its profit and loss account, right? So the company has taken this charge or expenses in the profit and loss account. But in income tax, this provision for gratuity will be disallowed. Okay. So the company has to pay more taxes in the current year. But in the next year, when the company will pay gratuity, actually, it will become an allowable expenses. It will become a deduction, right? So in this case, you have to show this, you have to show this entire tax expenses which you are actually paying as a part of your cash flow from operating activity. And just to give you a clear thought, right? Until and unless question says that this is a amount of tax, this is a amount of capital gain on sale of investing activity item, or let's say building, land, investment, till that time don't split into the investing or financing items. Okay. If you see the financial statement of all the listed companies, right, until and unless the tax impact on the specific transaction is not there, it will always be form part of your operating activities. Second, you are preparing cash flow statement. In cash flow statement, actual tax paid will come. Actual tax paid will come, right? So the concept of, disallowing in the current year and paying in the next year, this will arise to defer taxes. And defer tax concept is on an accrual basis in the profit and loss account. In cash flow, always actual tax paid will come into the cash flow statement, right? Any other question?
Yes, sir. Abrakesh. Sir, I am
Yeah,
audible?
Rakesh, you are audible.
Yes. Sir, my question in last slide, it is mentioned that extra cash flow from extraordinary items are not show. I mean, required to be shown under Ind AS 7. So now, what is the logic behind it? Is it not, I mean, affecting the decision, or under which Ind AS it is to be shown?
So, Abrikesh, first of all, if you have, I don't know if you have attended the first and second lecture when I have explained Ind AS 1, right?
Attended, sir.
Okay, when you have attended Ind AS 1 and specifically in the section of statement of profit and loss. In statement of profit and loss, you remember I have shown you one Excel file. In the Excel file, in the P&L, I have shown you 3 line item: exceptional item,
Yes.
extraordinary item, and
Yes,
prior
sir.
period item,
Yes,
right?
sir. Yes.
And one by one, I have explained the concept that
Yes,
these
sir.
Ind AS are on the basis of global concept. Globally, nothing is considered as an extraordinary. In accounting standard were completely, Indian made accounting standard. So in our old accounting standard in
Okay.
AS5, there was a concept of extraordinary item, right?
Okay.
But
Yeah.
in Ind AS and IFRS, this name of extraordinary does not exist. So since Ind AS 1 says that nothing is extraordinary,
Okay.
but in your mind, for example, there was an earthquake, there was a fire, there was a COVID. Okay, these are the kind of extraordinary items, right?
Yes.
So if the company has a loss due to these items in our accounting standard days, these kind of losses, expenses due to these items has to be shown as an extraordinary item in
Yes.
AS, not in Ind AS.
Yes. Yes.
Sir, in Ind AS, where we have to show it, we have to show it as an exceptional item if the amount is material, right? Sir, let's say due to fire, and of course it's an extraordinary situation. There is a loss to the company, but loss is insignificant, immaterial. Then it will be other expenses. Sir, but the loss is material. Then it will not be the extraordinary expenses. It will be exceptional item, right? In Ind AS, only the concept of exceptional item exists. Extraordinary does not exist. It is given in Ind AS 1. So it is given in Ind AS 1 means Ind AS 1 does not talks about extraordinary item. Like AS 5 specifically talks about extraordinary item.
So where this cash outflow of cash appears, I mean, in cash flow statement, or we should not show it at all.
So let's say
Even of
I'll
that
I'll
point.
give I'll give you two examples. I'll give you two examples. Loss due to fire. Okay. In the
Yes.
P&L, where it will come? In the P&L, it will come in your, let's say, in your other expenses. If the money is not material, amount is not material. If the amount is material, it will come into exceptional item, right? In the P&L. Now,
Yes.
what about cash flow? Now, what about cash flow? So due to this loss, for example, the actual cash loss is not there. The actual cash loss is not there. Okay. Then it will not form part of your cash flow statement. Means when you start your cash flow statement from profit before tax, you have to add back this expense, like you are adding back the other non-cash expenses, right? But for example, there is a robbery of cash. The cash, the money has been looted by the robbers. So the cash has gone out,
Yes.
right?
Yes.
The cash has gone out. So now in this case, your cash and cash equivalent has deducted. It has been reduced. So
Okay.
it will be shown in your cash and cash equivalent,
Okay.
right?
Okay. Thank you.
Yes. Any other question? So capital gain, Raj has a question, sir. Capital gain will normally, it will always be on your fixed asset or it will be on your investment. So if there is a capital gain tax, is it a operating or investing? It will be investing item. It will be investing item, right? Is that clear? But whenever you have a confusion, you have a doubt, clarity is not there, you can take this as a part of your operating item. Any other question, friends? Any other question? Abhishek is asking, sir, what about factory building which has been used for production of goods and factory building sold then? First of all, Abhishek, if you see the definition of operating item, investing item, and financing item, operating activity is an activity which is related to the revenue producing activity. Revenue producing activity, right? Investing activity is an activity which is related to the long-term acquisition and disposal of long-term asset. What is a long-term asset? PPE, investment property, intangible asset. These are the long-term asset. Okay. And investing activities are acquisition and disposal of long-term asset and investments other than cash and cash equivalents. Other than cash and cash equivalents, right? So these factory building are the PPE and PPE are the investing activity. Prerna is asking, sir, can you explain the deferred tax impact or treatment of deferred tax in your cash flow statement? Prerna, first of all, how do you prepare a cash flow statement, right? And let me show you one of the real life example. Just allow me a minute. I'm opening an annual report. Just allow me a minute. Yes, I'm sharing an annual report, okay? And probably it will be clear when you look at the report. Just give me a minute. I'm going to the relevant paragraph or relevant section of that annual report. Yes. So Prerna, this is a listed company. This is a public sector entity. And I'm showing you the P&L of this public sector entity. Yes. If you see the P&L of the public sector entity, this P&L is of course on an accrual basis. Revenue is there, right? If you see, revenue is there, expenses are there, then there is a profit before tax. Then there is a profit before tax. Then there is a tax expenses. In the tax expenses, current tax is there, deferred tax is. Deferred tax is a notional concept, right? What is a deferred tax? Means either you are postponing your tax liability or you are preponing your tax liability. It is not a cash flow concept. It is a concept which is given in Ind AS 12, right? Deferred tax is a accrual concept, first of all. So your tax expense will form part of your current tax as well as deferred tax. Current tax means tax which is as per income tax computation. Okay. So when you deduct tax expense, it will give you profit after tax. Okay. Your cash flow statement will always starts from the profit before tax. It will always start from the profit before tax. Okay. Let me take you to the cash flow statement. In this company, they have started with profit after tax and they have adjusted the entire tax expenses, right? So if I'll show you. So let me show you. First of all, let me take you to the P&L, but it will always start from the profit before tax. Okay. If you see, if you do the total of this, right? If you do the total of this, so 523,115, 508,650. What is the difference between these two numbers? What is the difference between these two numbers? 523,115 minus 508,650. It will give you around 14,000, this number. So let me show you. 14,465 probably, right? 14,465. So Prerna, what this company has done, this company started with profit after tax and added back the entire income tax expenses. Entire income tax expenses. Current tax plus deferred tax. What all other companies are doing and what you are supposed to do in Ind AS 7, you have to start your cash flow statement with profit before tax. Is that clear? Is that clear? Profit before tax. And this is what they have also done. But they started with profit after tax and then added back the entire tax expenses of the P&L, right? So this become profit before tax. This become profit before tax. Now they have done the adjustment of non-cash item and non-operating item. Then they have done the adjustments of working capital changes, right? Then in the last part, you can see income taxes paid. Income taxes paid. What is this? This is income taxes paid, actual paid, right? Deferred taxes are on the accrual concept. What income taxes you are actually paying will come here, right? Sir, how can I arrive at a income taxes paid? How can I arrive at a income taxes paid? Right. The opening balance of provision for tax is 100 rupees, right? Provision for tax in your balance sheet. The opening balance is 100 rupees. The closing balance is 80 rupees, let's say, right? And your income tax expense, your current tax expense for the year is 200 rupees. So what is your actual tax paid? 100 opening balance plus 200 rupees of current tax expenses, 300 minus 80 rupees. The provision for tax liability exists at the end of the year, 220. 220 is your actual income taxes paid, right? This will come here. You are not required to see the deferred tax. Is that clear? Is that clear? This is the tax actually paid. Tax actually paid. Okay. Is that clear? Very good. So friends, I have completed Ind AS 7, statement of cash flows. If you have any further question, please let me know. Please do let me know if you have any question. Let me see the query link also. I think no any question is left. Okay. So friends, now I'll start with Ind AS 34. Okay. And I'll share my Excel file because this standard I have taken Ind AS 34. Sharing my Excel file on Ind AS I have got in the last session, recorded session which was there. I'm just sharing that. Please confirm if it is visible. I hope it is visible now. Yeah. Friends, this standard Ind AS 34 is on interim financial reporting, right? What is meant by interim financial reporting? First of all, what is meant by financial reporting? Financial reporting means preparing and publishing financial results, financial statement, right? So we all are aware that every company is required to prepare its accounts, get the accounts audited, and file its accounts in either stock exchange, if it is a listed company, SEBI, and every company is required to file its accounts with the Ministry of Corporate Affairs, ROC, Registrar of Companies, right? So the year which we are following is a financial year starting from April ending on March. Okay. We are not following calendar year. What is a calendar year? It is January to December. What is a financial year? It is April to March. But since listed companies, there are so many listed companies, and SEBI requires, Securities and Exchange Board of India requires that listed companies are required to publish their financial results on a quarterly basis, right? Or if it is a debt listed company, probably on a half yearly basis. So you must have seen these listed companies are regularly reporting their results on a quarterly basis. Now, friends, what is your interim period? Interim period is a period which is less than 1 year, which is less than 1 year. Okay. It could be 3 months, it could be 6 months, it could be 9 months. Okay. This is known as an interim period. Simple. Interim period is a period which is less than 3 months, which is less than 12 months, less than a year. This is known as an interim period. Interim period is a period in between 12 months. This is what we discussed as an interim financial reporting. Okay. So these companies, listed companies, are preparing their results on a quarterly basis. So this is known as the interim period. Now, there was a big question that if a company is required to prepare its financial statement for a quarterly basis, means 4 times in a year, and financial statement preparation is not a small task. You have to prepare balance sheet, you have to prepare profit and loss, you have to prepare statement of changes in equity, statement of cash flows, and the big, huge, and lengthy notes to accounts. It's not a small task. So now the question is, sir, are we required to prepare all these big lengthy accounts on a quarterly basis? Right? It will take a lot of cost and efforts, a lot of time. And sir, we understand that yearly financial statement is important and useful because it is used by the regulators also, like income tax department. Income tax department is asking for the full set of audited financial statement whenever scrutiny will come, or whenever you file the tax audit report, income tax return, you have to fill the balance sheet numbers, P&L numbers, etc., etc. So year-end accounts, we all agree, as a future chartered accountant, we all agree year-end accounts are required. Agree or not agree? Full set, the complete set of financial statement is required, right? But what about the quarterly financial statement June? Even SEBI asked that on a quarterly basis, at least in the in the quarter of June and December, you have to file only P&L. You have to file only P&L. Even SEBI is not asking why listed companies are preparing their financial statement on a quarterly basis, because they have to publish their results to the street. Street means to the Securities and Exchange Board of India. And SEBI is only asking for June and December quarter P&L. SEBI is only asking the P&L. In September and March, SEBI is only asking balance sheet and cash flow in addition to P&L. Only these 3 pages, right? Only these 3 pages. Now, the question was, if SEBI is only asking these 3 pages or 1 page, why the detailed financial statements are required? And here, Ind AS 34 has helped everyone. Ind AS 34 says that whenever you are preparing interim financial statement, you have to take 2 routes. Number 1, if you want to prepare a complete set of financial statement, you can prepare. It's your wish, right? But if you don't want to prepare a complete set of financial statement, then Ind AS 34 says that you can prepare a condensed, means concise, right? Compressed, small set of financial statement, condensed set of financial statement. Sir, what is a condensed set of financial statement? You can give a condensed balance sheet, means just balance sheet page, and you are not required to give any breakup of balance sheet item in the notes to accounts. You are not required to publish that. You are not required to prepare that. Okay. Statement of profit and loss. You need to just prepare a 1-page statement of profit and loss, and the detailed breakup of the items in the P&L is not required in the notes to accounts. Like there are a lot of disclosures, right? For revenue from operation, you are disclosing. Other income, you are giving a schedule. Other expenses, you are giving a schedule. Employee benefit expenses, you are giving a schedule. You are giving an actuarial disclosure, right? A lot of disclosures are there. Statement of changes in equity, right? Only a statement of changes in equity. Condensed statement of cash flows, only a 1-pager cash flow. And significant or limited note to accounts. And standard says that you are not required to give a detailed notes to accounts. You are only required to provide significant or limited notes to accounts, right? Significant or limited notes to account. Sir, do we need to provide the comparative also? Standard says, yes, you need to provide the comparative also for the comparable period. Okay. And standard has also given that what should be the comparative. Standard has said that for balance sheet, since balance sheet is always asset, balance sheet तो हमेशा asset होती है ना. Let's say the Tata Steel Limited. This company was incorporated in 1907. And at that point of time, the company has purchased a land. Even after 117 years, this land will come into the balance sheet of Tata Steel Limited. Why? Because balance sheet numbers are carried forward and brought down. P&L will never be carried forward and brought down, but balance sheet is always carried forward and brought down. You understand CDBD of balance sheet? Yeah. So friends, standard says that whenever you are preparing a financial statement for an interim period, for example, for 30th June or 30th September or 31st December, your balance sheet will always be 31st March, just last 31st March audited. Your balance sheet will always be last 31st March. Is that okay? समझ आ गया? Sir, what about profit and loss? Standard says that your profit and loss should be for the quarter and year to date. What does it mean? Let's say you are preparing an interim financial statement for 30th September, which is half year, right? So you will provide balance sheet of 30th September with a comparative of 31st March. Balance sheet तो current period की आएगी ना 30th September with a comparative of 31st March. But profit and loss will be for the quarter, which is for the current quarter. What is the current quarter in 30th September balance sheet? In 30th September period, half year period, what is the current quarter? What is the current quarter? In a half year period from 1st April to 30th September, what is the current quarter? What is the latest quarter? July to September. You're right, Abrakesh. You're right. Prerna, it is not Q3. It is Q2. So we are looking from the financial year perspective. And from the financial year perspective, we are saying Q1 is June, Q2 is September. You are right. So it's July to September is a current quarter. You have to give the P&L performance of the current quarter. And you have to give the performance of year to date also. आपको P&L current quarter का भी देना और year to date. What is year to date in this case? 1st April to 30th September. Means year to date. So from 1st April to 30th September. So P&L you have to give for 3 months as well as 6 months. Right? And what will be your comparative P&L? So balance sheet, sir, you have told that balance sheet of 30th September needs to be compared with 31st March because balance sheet numbers are carried forward, right? But P&L is always for the period. So the current period P&L is 1st July to 30th September and 1st April to 30th September. The comparative P&L for the comparative period has to be given. Last year, 1st July to 30th September. Last year, 1st April to 30th September is required. Okay. Sir, what about changes in equity and statement of cash flow? A statement of changes in equity and statement of cash flow will always be given for the year to date current year and year to date previous year. Right? So in this case, 1st April to 30th September, statement of cash flow is required. 1st April to 30th September, statement of changes in equity is required with the same period of last year. And sir, what about notes to accounts? So we understand one page balance sheet, one page P&L, one page statement of changes in equity, one page cash flow. Sir, what about notes to account? Ind AS 34 has given two type of notes to accounts. Number one, notes which will be disclosed only if it is significant or material. Right? So if the item is significant or material, then only it is required to be disclosed. In Ind AS 34, examples are given. Write down of inventory to NRV. there's an impairment in inventory. You all know inventory has to be measured at cost or NRV, whichever is lower. Are you aware about this fact? AS2, Ind AS2. Have you heard this? Inventory has to be measured at cost or NRV, whichever is lower. Let's say cost is 100 rupees. Net realizable value is 80 rupees. So you have to book a loss of 20 rupees. 20 rupee of impairment loss on inventory. Right? 20 rupees of impairment loss on inventory. So friends, if there is an impairment loss on inventory, it is required to be disclosed as a notes to accounts in the interim financial statement, right? Provided the amount is material. Sir, if the amount is immaterial, insignificant, then it is not required to be disclosed, right? So standard has given you some line items, some items, right? Like impairment of financial asset as well as non-financial asset, reversal of any provision for restructuring, acquisition and disposal of property, plant and equipment, capital commitment, litigation settlement, contingent liability and contingent asset, action of prior period error, changes in the business or economic environment, which is the impact on the fair value of the financial asset or liability, any default in loan covenants, loan terms and conditions, related party disclosures in the classification of financial asset and financial liability, transfer between the income hierarchy in the financial asset or liability. Friends, if you are first time, if you are the first time listening FR lectures, or you are first time attending or learning FR, right? You will be able to understand these line items when you attend the respective standards. For example, financial instruments. For example, fair value measurement, Ind AS 113. Because when you will read transfer in hierarchy in the financial asset or financial liability, probably for many students there will be a question, sir, what is a financial asset? What is a financial liability? Sir, what is the input hierarchy? All your answer will be covered when you will complete those respective standard. This is a financial statement related standard. And that is why it talks about these disclosures, right? Example written down to inventory. This concept is given in Ind AS 2. Impairment of financial and non-financial asset. This is given in 109 and 36. Provision for restructuring. This is given in Ind AS 37. PP, Ind AS 16. Contingent liability, contingent asset, Ind AS 7. Related party disclosure, Ind AS 24, right? But just to cut a long story short, the standard has given you some item which is required to be disclosed if the amount is material. If the amount is not material, these items are not required to be disclosed. You can learn these items, you can remember these items, right? That these items are only required if the amount is disclosed. What is meant by other disclosure? What is meant by other disclosure? So friends, other disclosure are those disclosures. Doesn't matter, amount is material or immaterial. It is a mandatory disclosure. Other disclosures are mandatory. You are not required to see the amount. It is a mandatory disclosure. What is that mandatory disclosure? For example, if a company has followed the same accounting policy, right, which it has followed in the last audited full financial year. Let's say the company is going to prepare a result, going to prepare an interim financial statement for 30th September, okay, 2024. What is the latest year-end financial statement the company had prepared? What is the latest year-end financial statement the company has prepared? 31st March. अगर कंपनी को 30 सितंबर 2024 के फाइनेंशियल बनाने हैं तो लेटेस्ट फुल ईयर कौन सा कंप्लीट किया होगा? 31st March 2024, राइट? सो स्टैंडर्ड कहता है द कंपनी इज नॉट रिक्वायर्ड टू रिपीट the entire accounting policy in the interim financial statement also. The company just required to give a statement that same accounting policy or same estimates have been followed, which we have followed in the last annual year-end financial statement. But if there is change in any accounting policy or if there is a change in accounting estimate from the last annual financial period, the company is required to disclose that what is the change and why there is a change, right? The nature of the change, right? And the nature and impact of the change is required to be disclosed. If the company has a business of cyclical or seasonal nature, like sugarcane industry, it is required to be disclosed. If there are exceptional item, uppercase not extraordinary item, exceptional item are required to be disclosed as per Ind AS 1. Okay, not extraordinary item. In Ind AS and IFRS, the concept of extraordinary does not exist. Okay, so if there is any exceptional item, it is required to be disclosed. If there is any change in estimate, it is required to be disclosed. If the company has taken any loan, the company has buyback any shares, the company has raised any equity share, it is required to be disclosed. If the company has paid any dividend or declared any dividend, it is required to be disclosed. Segment reporting, it is required to be disclosed. Event occurring after reporting period, it is required to be disclosed. If the company has acquired any subsidiary or sold any subsidiary or any discontinued operation is there, it is required to be disclosed. Fair value disclosure, it is required to be disclosed for financial instruments. If an entity becomes investment entity or ceases to be investment entity, you will learn the concept of investment entity in Ind AS 110, right? It is required to be disclosed. This segregation of revenue from contract with the customer. What are the type of revenues are there? Sale of goods, sale of services. This disaggregation is required to be disclosed. So friends, these items are the mandatory line item which is required to be disclosed even the amount is not material. This was regarding the disclosure in the note flow. Hence, the disclosure of compliance with Ind AS. If you have attended the lecture of Ind AS 1, I have told you, as per para 16 of Ind AS 1, the entity has to give the explicit and unreserved statement of compliance with all Ind AS, right? The same disclosure of compliance is required to be disclosed in the interim financial reporting. Okay. Principle of measurement. Now, friends, there are some specific measurement principles which are also given in Ind AS 34. Materiality. Let's say you are preparing a financial statement of a quarter. Quarter means June, let's say. And in the June, of course, you will have a revenue of 3 months, expense of 3 months, and profit of 3 months. Let's say the profit of 3 months is 10 crores. And in the full year, the profit is, let's say, 50 crore or 40 crores. But in a quarter, it will be 10 crore only. So now the question is just to look at the materiality, where profit for entire year needs to be seen or only profit for that quarter needs to be seen for the purpose of materiality. Uppercase, Prerna, Abhishek, what is your view? For looking at the materiality, whether you need to see the numbers of interim period or the number of full year. Friends, for assessing the materiality, you have to see the numbers of that interim period only to check whether that amount is material or not material in that period, right? You are right, Prerna. It has to be interim period only. Same accounting policy as annual, except there is a change in the after annual financial statement. And it says that you have to follow the same accounting policy which you have followed in the last annual audited financial statement. But if the standard has been changed, then what happened? In that case, you have to take the change. Revenue, seasonal, cyclical, or occasional. If the company is a seasonal industry or cyclical industry, in that case, let's say the revenue in quarter 1 is 10 crore, in quarter 2 it is 10 crore, in Q3 and Q4 it is 100 crores. So whether the revenue needs to be straight lined or the revenue has to be accrued in the period in which it arises. So revenue has to be accrued in the period in which it arises. It is not required to be straight lined, right? Impairment in interim financial statement. The measurement of impairment. Standard says that, and it is coming from Ind AS 36. Standard says that if you have impaired a goodwill, let's say in the quarter one, the goodwill was 100 crores. In quarter two, you have impaired a goodwill because there was major losses in the subsidiary in quarter two. You have impaired a goodwill in quarter two. In quarter three, the subsidiary has got huge orders. So in quarter three, can the impairment loss on goodwill can be reversed? Whether the impairment loss on goodwill can be reversed? No. You are right, Prerna. Why? Because Ind AS 36 says that once goodwill has been impaired, doesn't matter, even in a quarter of a particular year, it cannot be reversed in the next quarter of the same year, right? So goodwill once impaired, it will never be restated. Okay. PP. But what about assets other than goodwill? For example, building, land, or machinery, or other fixed assets. In that case, if these assets have been impaired, it can be reversed. The impairment can be reversed in the next quarters, right? If there is a favorable indicator of impairment. And friends, there is a concept of income tax also, the income tax measurement. Standard also says that in case of income tax for the interim period, June, September, December, the income tax for the interim period is required to be recognized or measured on the basis of best estimate of weighted average annual income tax rate for full year. What does it mean? And I have, you know, I have explained this with the help of this example in the institute study material. What is the weighted average annual income tax rate? For example, in this example itself, in quarter one, the income was 60,000. In Q2, Q3, Q4, it was loss of 15, 15, 15. Right? Year profit is 15,000. To compute income tax for full year, it is coming out at 3,000 by applying this formula, which is given in the question. So what is the full year weighted average income tax rate? 20%. You have to apply this 20% in every quarter to arrive at income tax expenses, right? So the income tax expense for an interim period has to be calculated on the basis of weighted average income tax rate for full year, right? This is a concept for measurement of income tax in the interim period, right? So friends, this was a revision of Ind AS 34. And of course, I have carried this revision in 25 minutes. Of course, this session was 2.5 year or 2.5 hour session. If you have gone through with the recorded lecture, it was close to 2.5 hour session on Indian Accounting Standard 34 interim financial reporting. Now, students, over to you. If you have any question on Ind AS 34, I would be happy to answer. Please do let me know if you have any question on Ind AS 34. Let me know if you have any question on Ind AS 34.
Sir, Abrakesh.
Yeah.
Sir, in earlier, part, you told that for comparison profit and loss account, whether the profit of the comparison same quarter or Y2D, till the period 6 months, for example, is to be given. So why only quarter comparison? I agree that profit and loss account is for the period, but when we look at from current period, current quarter profit with earlier full year, should we not, at least put required it to compare? There might be some indication if we compare it from Y2D last year.
Okay. So, Abrakesh, let me reiterate or let me correct your understanding. I hope the Excel file is there on the screen.
Yes, sir. Yes, sir.
So let's discuss with the help of this example again. X Limited is preparing interim condensed financial statement for the period ended September 2023, right? Period is required to be presented in such interim financial statement. Balance sheet. Balance sheet, current period balance sheet is 30th September 23. You agree?
Yes, sir.
Comparative period is of course it will be latest annual
Latest.
audited 31st
Yes.
March.
Yes, sir.
Profit and loss. What is your profit and loss for the current quarter? The quarter ended September
Q2.
23, July to 30th September. You agree?
Yes, sir.
So in this case, only the latest or current quarter profit has been taken, right?
Yes, sir.
The last quarter profit must have been shown when this company has presented June quarter results.
Hmm.
So only the current quarter. And what is current quarter? Which is 3 months
Yep.
ending 30th September, right? So
Yeah.
let me complete first. Okay. Year to date. What is my year to date? Year to date is 6 months in this case. 1st April to 30th September. Correct?
Yes.
So in this case, I am giving a profit and loss for 1st July 23 to 30th September 23 and 1st April 23 to 30th September 23.
Okay.
I am giving current 3 months and the current 6 months, year to date and current quarter,
Yes.
which is a requirement of SEBI regulation also for the listed companies, right?
Hmm.
SEBI
Yes.
also demands that. Now this is the current period. Now what is the comparative period? For the sake of months comparative, if I am giving current quarter, which is 1st July 23 to 30th September 23, what will be my comparable? Table
Q2
will be
22.
July 22 to 30th September 22. The year to date, what is my comparable? Current period is 1st April 23 to 30th September 23. Table will be 1st April 22 to 30th September 22. This is about P&L, right? So P&L is required to be given for the current quarter and year to date with a comparable of the same period of corresponding year, right? Cash flow and statement of changes in equity, it is always for the year to date. Then why P&L is required for the current quarter? Because of the SEBI regulations. SEBI regulations also require that SEBI regulation requires that you have to provide the current quarter P&L as well as year to date P&L. And that's how Ind AS 34 has also included.
Okay.
Is that
Thank you.
clear, Mukesh? Is that clear?
Yes, sir.
Okay. Any other question? So Prerna, Abhishek, or other participants, if you have any question. Chandan, Saman, Viraj, any question on Ind AS 34 interim financial statement? So if you don't have any questions, so let's break. Let's have a break for 10 minutes. It's 8:36 now. It's 8:37 now, and we'll start at 8:47. Okay. So students, before break, we have discussed two standard, Ind AS 7 and Ind AS 34. And these recorded videos were available, which was, taken by me in the last batch. And the next session is Ind AS 8 and Ind AS 10, which must be taken by Mr. Kapileshwar Bhalla. And I'm sure that you guys have also covered the videos on Ind AS 8 and Ind AS 10, because this is a revisionary lecture and this is kind of a query based lecture. So let me see if there is any question which is there for Ind AS 7 and 34. If there is no any question. Okay. So students, now we are discussing Ind AS 8 and Ind AS 34. Okay. Now, what is Ind AS 8? Ind AS 8 talks about changes in accounting policy. It talks about accounting policies, yeah, changes in accounting estimates and correction of errors. So this standard covers three aspects: accounting policy, accounting estimates, and correction of errors. And student, just allow me a minute. Uh, let me open my Excel file. Uh, that Yes, I hope my Excel file is visible. Is my Excel file visible now?
No, sir, not now. It is not only you are visible, not Excel file. Okay. Now it's visible. Yes, sir.
Is it visible now?
Yes,
Okay.
sir.
Yeah, students, we are talking about Ind AS 8. It is accounting policies, changes in accounting estimate, and errors. Right. So this standard talks about three aspects: accounting policy, right? Accounting estimates, and error. Accounting policy, accounting estimates, and errors. If I talk about this accounting policies, accounting estimate, and errors, first of all, this standard defines what is accounting policy, right? So this standard gives you three things. Number one, it defines what is accounting policy. I write accounting policy as a AP. For the sake of clarity, let me define this AP, right? And this accounting estimate, for the sake of clarity, let me write it as a AE. This standard define what is accounting policy. This standard define how to select an accounting policy. This standard also define how to select an accounting policy, right? And this standard also provide a treatment of change in accounting policy. Right. There are the three agenda which is defined in this standard in terms of accounting policy. What is the accounting policy? How to select an accounting policy, and what is your treatment of change in accounting policy, right? Students, if I talk about what is accounting policy, what could be the accounting policy? And before talking about the definition of accounting policy, let me take an example and make you guys understand that what is an accounting policy. Let's say, let's say you must have seen an accounting policy on fixed asset, on property, plant, and equipment, right? And how it is written? It is written like property, plant, and equipment are depreciated over the useful life. Property, plant, and equipment are depreciated over the useful life. Property, plant, and equipment are depreciated over a useful life. Okay. So what is this? If I'll give you this statement, let's say Viraj, if I give you this statement, property, plant and equipment has to be depreciated over the useful life of the fixed asset. Property, plant and equipment is required to be depreciated over the useful life of that asset. So this statement shows the rule, principle, convention, practice, right? इसको पढ़कर क्या समझ में आता है? इसको इसको सुनकर ये समझ में आता है, it talks about some rules, it talks about some conventions, it talks about some practices, right? It talks about those items. So it means if I talk about this particular item, so what is my accounting policy? My accounting policy is nothing. It's a my accounting policy is rules, convention, practices, right? Which is required for an item in the financial statement, right? So friends, if I talk about this thing, if I talk about this item, so what is the accounting policy? Accounting policies are rules, convention, practices applied by an entity in relation to a particular item in the financial statement. I hope it is clear to everyone, right? This is the definition of accounting policy. And what could be the examples? Example is property, plant and equipment. Example is property, plant and equipment, right? Property, plant and equipment is required to be depreciated over the useful life. Okay. So in this example, this is accounting policy. But what is a useful life? Whether useful life is accounting policy or accounting estimate. How to arrive at a useful life? Useful life is an accounting estimate. It is an accounting estimate, right? So today you are estimating that the life of your machinery will be 10 years. It may be useful for 10 years. It may break down. Am I audible clearly? Because one of the participants is saying my voice is breaking. Am I audible clearly?
No, sir, it's clear.
Okay.
Yeah, it's clear.
So probably the problem is from your connection, internet connection, Abrikesh. So in this case, the fact is accounting policy, but this useful life is an accounting estimate, right? Second example I want to take here. Impairment of asset. An asset is impaired if recoverable amount is lower than the carrying amount. What is this? I would say this is a rule. This is a rule. This is a practice. This is a principle. This is a convention. This is a rule. I'm saying that impairment, an asset is impaired if the recoverable amount is lower than the carrying amount. I'm saying that as a principle. Now, what is a recoverable amount? Recoverable amount is a higher of fair value less cost to sell and value in use. You will learn this concept when you will learn Ind AS 36 impairment of asset standard. So friends, recoverable value is a higher of fair value less cost to sell and value in use. Again, it's a kind of a rule, principle. Now, friends, what is fair value less cost to sell? You are estimating the fair value of that transaction and you are estimating what will be my cost to sell. So what is this fair value less cost to sell? It's an estimate. What is my value in use? Value in use is present value of future cash flows, present value of estimated cash flows, right? It's a value in use. It's a value in use. So value in use is a present value of estimated cash flows. Means you have to estimate a discount rate. You have an estimate. You have to estimate a future cash flows. So what is your value in use? It's an estimate, right? So the entire thing is a policy that an asset is impaired if the recoverable amount is lower than the carrying amount. Recoverable value is higher of fair value and less cost to sell and value in use. This is a policy. And what is an estimate? Estimate is your value in use and fair value. Okay. So just to cut a long story short, what you will do is like a policy. How you will do is like an estimate, right? Is that clear? Is that clear to everyone? How to select an accounting policy? How to select an accounting policy? Let's see. Prerna is a chartered accountant, and after qualifications, she got a job. Okay. And when she joined her first job in the industry, her CFO called her, and CFO told her that Prerna, for the first time in life, we have, we have, we have taken ERP. We have installed ERP system, and we spent a huge amount of rupees 5 crore in ERP. So Prerna, you have to draft an accounting policy on this ERP. So Prerna is saying, sir, it is an intangible asset. The CFO says, yes, I know, Prerna, and I want you to draft an accounting policy on intangible asset. We don't have any accounting policy on intangible asset. Normally, what is the purpose of the accounting policy? The purpose of the accounting policy is to provide the accounting of that entire item. How it is going to be recognized, how it is going to be measured, how it is going to be amortized, what is the impairment principle, right? These things needs to be identified, or these things needs to be addressed in the accounting policy. Now the question is how to select an accounting policy. So first of all, Prerna, what you will do for drafting an accounting policy? You will check whether there is a relevant standard on intangible asset. Do we have any specific standard on intangible asset? So Prerna had checked all Ind AS and she found that Ind AS 38 is there, which deals with intangible asset. Prerna, Ind AS 36 talks about impairment. Ind AS 38 talks about intangible asset. She found that Ind AS 38 is there, which deals with the intangible assets. She read that standard and she has drafted the accounting policy, because Ind AS 38 talks about how to recognize, when to recognize an intangible asset, right? How to measure an intangible asset, it has to be measured at cost. And how to amortize an intangible asset, it has to be amortized over the contractual life or over the useful life of the intangible asset, when it is going to be impaired. So all these answers is there in the Ind AS 38. So Prerna has drafted the accounting policy. But let's say if there would be some item, let's say Bitcoin. I'm just taking an example. Or let's take an example of intangible asset itself. What happened if the specific standard on such item would not have been there? What happened if specific standard on intangible asset would not have been there? Then standard says that if specific Ind AS would not have been there, in that case, you have to apply your judgment. Judgment means your brain. High Court, Supreme Court का judgment नहीं, अपना दिमाग apply करना है to draft an accounting policy by following the following resources. Sir, what is the following resources? Number one, standard says that if you do not have a specific Ind AS, please see if their similar Ind AS is there. For example, if Ind AS on intangible asset is not there, do you have a standard on tangible asset or some other intangible asset, right? If it is there, in that case, you have to draft an accounting policy according to that standard. For example, Bitcoin, there is no standard on Bitcoin. Then what could be the similar closest standard? Is it financial instrument standard? Is it inventory standard, right? For example, the closest similar standard is financial instrument standard. So you can apply Ind AS 109 for drafting an accounting policy on Bitcoin. Sir, for example, even the similar standard is not there. Then the standard says that you have to refer the conceptual framework for financial reporting, right? And I don't know whether you guys are aware or not aware. There is a framework known as a conceptual framework for financial reporting, right? And you will have a lecture or you will have a session on the conceptual framework for financial reporting as well, right? I don't know whether it will be on the recorded basis or it will be on a live basis, but yes, there will be there. It will be there. So friends, this conceptual framework is kind of a guideline for drafting all the Indian accounting standard. It says that what is asset, what is liability, what is income, what is expenses, what is equity. It says that how these element of financial statement are going to be recognized, how these element of financial statement are going to be measured. It answers so many fundamental questions on the element of the financial statement. So Ind AS 8 says that while drafting or selecting an accounting policy, if you do not have a specific Ind AS, then go to the similar Ind AS. If you don't have similar Ind AS, then go to conceptual framework for financial reporting. Sir, what happened if my answer will not come even as per the conceptual framework? Then standard says that then look at the IFRS guidance. And friends, IFRS is so vast, I would say. Just within a month, they have issued two new standards, IFRS 18 and IFRS 19. These standards will be applicable after 3 years. So they have launched two new standards in advance by 3 years, right? So IFRS is doing lot of research, right, in terms of new standards. So you have to see the IFRS guidance while checking whether the guidance on this particular new item is there in IFRS or not. If the guidance is there in the IFRS, you can refer that guidance while drafting the accounting policy. Sir, why IFRS? Our Ind AS are the converged version of IFRS. So what I have told you, सबसे पहले specific Ind AS, नहीं है तो similar Ind AS, then conceptual framework, then IFRS guidance. Even though if IFRS guidance is not clear or it is not there, then you have to see the other similar standard setting accounting bodies guidance, like US GAAP. If you got the answer in US GAAP, that is okay. If not, then you have to see the industry practice, that what is the industry practice. This is kind of a authoritative guidance, which is given for selecting an accounting policy, right? Probably you have read these items, you have read this concept in your study material, as well as the video lecture which you have listened, which you have attended of Mr. Kapileshwar Bhallaji. Right, friends? Friends, now what is the treatment of change in accounting policy? We understood what is accounting policy. We understood how to select accounting policy. Then we are discussing what is the treatment of change in accounting policy. Friends, standard says that if there is a change in accounting policy, you have to ask two questions. Question number one, whether this change in accounting policy is due to a new standard or an amendment in the new standard. Whether this change is due to a new standard, number one. Question number one. Question number two, whether this change is not due to the new standard, right? And let's answer the question number one first. If the change is due to the new Ind AS, right? Let's say, as I told you recently, as I told you that in IFRS, two new standards have come. So after 2 to 3 years down the line, these two new Ind AS will come. These two new Ind AS will come in, in Ind AS also, in India also. So if the change in accounting policy is required due to new Ind AS, for example, on 30th March 2019, effective from 1st April 2019, the new Ind AS 116 on lease had come, right? And this lease standard has changed the entire lease accounting for the lessee. Okay. So the lessee accounting in the earlier standard and the lessee accounting in the current standard is totally a different accounting. Okay. So friends, when this lease accounting standard came, the fundamental principle of change in accounting policy is to apply retrospectively, the fundamental principle. But if the change in accounting policy is required due to new Ind AS, then Ind AS 8 says that you need to check whether transition provision is there in the new Ind AS, right? In every new Ind AS, the transition provisions will be there. And what is a transition provision? The exemption, the option which is given for the first time while moving from old standard to new standard. Right? If the transition provision is there, then follow transition provision. Like when Ind AS 116 had come, there was a transition provision that if a company wants to apply prospectively from the date of the standard, it can apply that, right? It means the new Ind AS itself allows you to prospectively apply the change in accounting policy, to apply the change in accounting policy prospectively. This new Ind AS allows you, right? So, friends, if the change in accounting policy is required due to new Ind AS, then please follow new Ind AS transition provision, right? Sir, if the company is changing the accounting policy voluntary, for example, government grant, earlier the company was showing at a nominal value method. Now the company decided to show it fair value method. So both the options are allowed in the standard. The company is changing the accounting policy voluntarily. In that case, the company is required to take the impact of change in accounting policy on a retrospective basis. It has to be applied retrospectively, right? Is that clear? You remember, if you have attended the lecture of Ind AS 1 recently, last week, right? So last week, I have shown you the ONGC financial statement where there was a change in accounting policy and the company has restated the comparative and the company has given the third balance sheet. The company has given the third balance sheet, opening of the comparative period balance sheet. The company has given the reconciliations and the company has also explained that what is the impact of the change, what is the change, nature of the change, and what is the impact of the change in every line item of balance sheet, profit and loss, and cash flow for the comparative year and for the opening balance sheet of the comparative year, right? I hope this accounting policy part is clear to all of you. Any question on the accounting policy part? And now, what is the accounting estimate? As I told you, let's say an asset impaired recoverable value amount lower than carrying amount. Recoverable amount is higher of fair value less cost to sell and value in use. I'm giving you this fact example. The company has made an error while estimating a discount. The company has estimated a discount rate of 10%, but it was inadvertently applied at 1% by the accountant while doing value in use calculation. Identify above the accounting policy, accounting estimate, and error correction of. In this statement, what is your accounting policy? What is your accounting policy in this statement? This statement, this is your accounting policy. This is your accounting policy, right? This statement is your accounting policy. In this statement, what is your accounting estimate? Tell me what is accounting estimate in this statement. Estimating fair value less cost to sell and value accounting estimate. What is error? What is error which needs to be corrected in this statement? Tell me. Accountant has wrongly applied 1% instead of 2% is an error which needs to be corrected. 9% is the error. So have you understood the meaning of accounting policy, accounting estimate, and correction of errors in this standard with the help of this example? Yeah. Yes. Now let's come to the accounting estimate. What is accounting estimate? This standard define what is accounting estimate. Friends, before moving to the accounting estimate, I want to make one thing clear here. So last year, there was a change in accounting policy last year by MCA in 2000, March 2023. So now the concept is material accounting policy information. Material accounting policy information. You know, earlier we were using the word significant accounting policy. Now the word is material accounting policy information, right? In Ind AS, in Ind AS, if a listed company or an Ind AS compliant company is preparing its financial statement, in the notes to account, it has to provide the material accounting policy information, right? Material accounting policy information, the company is required to provide all the accounting policy which is material, either in the nature or in the size, whether amount is material or the item is significant or material, right? Item is significant or item is material in terms of substance. Sir, what is meant by item is material in terms of substance? Let's say the company balance sheet is, for example, 1000 crore, the total size of the balance sheet. And fixed asset, which is property, plant and equipment, is 250 crore. So again, this fixed asset is critical. It is material. So by the size, by the amount, the accounting policy on property, plant and equipment is required to be given. Second example, the company has a huge amount of carried forward losses, right? And since the company has a huge amount of carry forward losses, brought forward losses, the company is not preparing deferred tax asset. The company is not recognizing deferred tax asset on these brought forward losses. But let's say in the future year, if the convincing evidence will be there that company will be able to recover the brought forward losses, in that case, the company will be able to create deferred tax asset on those losses. आज की डेट में कंपनी ने बुक्स में क्रिएट नहीं किया हुआ deferred tax asset. So if I talk about materiality in terms of amount, as on today it is 0, but the company has a potential to create deferred tax asset in future, and hence according to substance this item becomes a material and company is required to provide accounting policy on deferred tax asset, right? So friends, now the concept is material accounting policy. You must have been, heard about this concept in the last recorded lecture as well. What is accounting estimate? Accounting estimate means monetary amounts which is subject to measurement uncertainty. For example, an electronic company, automobile company is creating a provision for warranty obligation, right? And when they are creating a provision for warranty obligation, they are estimating the amount on the basis of best estimate. What is that? What is that? That is an estimate, right? That is an estimate. If they are earlier they have estimated my 5% of the sales is my warranty obligation, right? So this 5% is an estimate, accounting estimate. But now tomorrow, when they estimate, no, it is not 5%. Let's say it is 7.5%. So it impacts your monetary amounts. It impacts your estimation of provision. It impacts your numbers, right? So what is your accounting estimate? Accounting estimate is monetary amounts which is subject to measurement uncertainty. Right? Is that clear? Sir, what could be the example of accounting estimate? Provision for bad debt, depreciation, useful life, residual value of asset, right? Useful life of fixed asset, method of depreciation, fair value less cost to sale, value in use, discount rate, All these are accounting estimates, right? Even in actuarial valuation, when you do the actuarial valuation of gratuity and leave encashment, even though you are taking a lot of estimates, your salary escalation rate, your discount rate, your attrition rate, right? These are what? These are the accounting estimate. So if I talk about actuarial evaluation, in accounting for employee benefit, so provision for gratuity has to be measured on projected unit credit method using actuarial evaluation. This is a policy. But how to do an actuarial evaluation? By estimating a discount rate, salary escalation rate, attrition rate, right? So these are the accounting estimates. So what is the treatment of change in accounting estimate? This kind of talks about what is the treatment of change in accounting estimate. It says that change in accounting estimate is always required to be applied prospectively. It is not retrospective. You are not required to change your comparative. You are not required to give third balance sheet. You are not required to give any reconciliation. The change in accounting estimate will always be applied prospective, right? And you have to provide impact of this change in accounting estimate in the current year, and what will be the impact in future year, you have to provide in the notes to account, disclose in the notes to. Error. Now, what is the meaning of error? What is error? Error means intentional mistakes or unintentional mistakes. Whether error includes frauds, whether error includes fraud. Tell me whether error includes only mistake, or it also includes fraud. Error includes fraud as well. We are not the regulator. We are the chartered accountant. So we have to correct the books, right? So for us, doesn't matter it is mistake or error. It is intentional or unintentional, doesn't matter. We have to correct the books of accounts. As simple as that. And how do we correct the books of accounts? By applying Ind AS 8. Ind AS 8 says that the impact of error is material. You remember? Ind AS 1, this concept of change in accounting policy, treatment of change in accounting policy, correction of error, this concept is there in Ind AS 1 also. And I have explained in detail while discussing Ind AS 1. What is the impact of error? You remember in Excel file, I have given one example of that machinery which was purchased for 1 lakh and inadvertently it was recorded at 10,000. So the same explanation, the same concept is there in Ind AS 1 also. And I've shown you ONGC balance sheet as well. Yeah. So friends, first of all, error is a deliberate or or error is I would say intentional or unintentional mistake. If it is unintentional, it is a mistake. If it is intentional, it is a fraud, right? So what could be the kind of a error? And this standard does not talks about how to make an error. This standard talks about how to correct an error, right? So आपको error कैसे correct करनी है? Error could be mathematical error, could be application of wrong estimate, wrong policy, compensatory error, fraud. These are the errors. Whenever the impact of error is material, you need to restate your comparative. You need to give the third balance sheet, which is opening of the comparative, and correct the impact of the error. And you have to disclose what is the nature of the error. You have to disclose what is the impact of the error and what is the impact of the error in the comparative balance sheet, in the opening balance sheet, in the comparative P&L, in the comparative cash flow, right? And what is the nature of the error and what is the impact of the error on all these line items. Like accounting policy, you have to disclose this in detail, right? Is that clear? Is that clear? Very good. So friends, this is the impact this standard talks about. This standard talks about treatment. This is a treatment of correction of error. What is the treatment of correction of error? Correction of, right? So it is always retrospective. Sir, if the impact of error is not material, it is not an error from the accounting perspective. Means whatever is the error, just take the impact of the error in the current year P&L. For example, there was a 5,000 rupees of salary which the accountant has forgot to record, right? It is immaterial. So it has to be clubbed in the current year salary expenses. But there was a 5 crore of salary which the accountant has not recorded in the last year. Now, in the last year means when you present the number in the current year, you have to present the comparative year also. In the comparative year, it has to be corrected if it belongs to the last year only. But if it belongs to the prior to last year, in that case, you have to give the opening balance sheet, correct the balances in the opening balance sheet, which is nothing opening of the comparative period, right? And this is how you correct the error. So, friends, these are the three aspects which we have read, understood in Ind AS 8. It's a small standard, and I have taken all the pointers in brief in the last, I would say, in how much time? In last almost half an hour. I have briefed Ind AS 8. So, students, please let me know if you have any question on Ind AS 8. I can see on the query box. Mansa is asking, sir, which IFRS Ind AS is applicable for insurance entities and banking sector? Mansa, on banking and insurance companies, IFRS and Ind AS is not applicable at all. They are applying accounting standard. Mansa has a second question. Judgment is required to determine estimate. So whether management is responsible for this? Of course, Mansa, management is responsible for identifying the estimates and judgments. Raj is asking, sir, choice between revaluation and cost model under PP is accounting policy, but impact of it in amount is accounting estimate. So Raj, this is a specific exemption which is given in Ind AS 16 also, because let's say last year you have applied a cost model and now you're applying a revaluation model. So it is a matter of fact, right? So in Ind AS 16, a specific exemption is given which says that, you know, whenever there is a change in cost model and revaluation model, of course, it's accounting policy, but the impact will be prospective. It is not a change in estimate. It is prospective impact, right? So this is kind of a specific thing which is there. Okay. But you cannot call it as accounting estimate. But you are right. The impact is prospective only. Any question on Ind AS 8? Any question on Ind AS 8? Change in depreciation is also accounting estimate due to change in policy. Change in depreciation is always an one. Moving from straight line method to WDV method is a change in accounting estimate. Even change in useful life is a change in accounting estimate. Even change in residual value is also change in accounting estimate. Any other question? Any other question, friends? Okay. Now the last standard of the day is yes, Prerna, if you have any question on Ind. So is 7, 8, 34 or 10? All the question we'll discuss after completion of in the next 10 minutes. Okay. Ind AS events occurring after reporting date. And again, I am doing a revision and I am teaching you the main concept of the standard. So the standard talks about, for example, your financial year. Your financial year starts from where? Your financial statement for your financial year starts from first 2023. The first March 2024, right? This is the reporting date. And now let's say 15th May, let's say 15th May 2024 is the board meeting date. Board meeting date in which financial statements are adopted and approved. financial statements are. So friends, what is my events occurring after reporting period? What is my events occurring after reporting period? Right? So my events occurring after reporting period is a period after reporting date, but before approval of the financial statement. My events after reporting period is and May. It's my events after reporting period. It could be events after reporting occurring after reporting. Be adjust events, non-adjusting event. It could be non-adjusting event. As we have video in the recorded video, adjusting events are those events where the evidence of condition was available on the reporting date. Where the evidence of condition was available on the reporting date. For example, the company has sold goods on credit basis to one of its customer. The customer become bankrupt in the month of February. The company was not aware of. The company was following, you know, the company was following for recovery of its debt. So when audit was going on in the month of April, the company has sent the balance confirmation. The company got the balance confirmation on 1st of May, and the company got to know that the customer become bankrupt. In this case, whether it is an adjusting event, answer is yes. Why? Because the evidence of condition was available on the reporting date. The only thing is the company was not. Second example could be the court case was going on, and the court case was going on. The company has sold goods to one of the customer. The goods were faulty, and customer was asking for compensation. The customer filed a case before end of the financial statement, before end of the financial reporting period, and the verdict came on 1st of May, and the court has announced a compensation of rupees 5 lakh to the customer. So whether it is an adjusting event, answer is yes. The evidence of condition was lying on the reporting date, and only the verdict or outcome has come in the after the reporting date, but before approval of the financial statement. So friends, the third example could be the company has acquired another company, a business combination has been done, and the fair valuation is going on because it's a time consuming exercise. So the company got the fair valuation report on 5th of May. So of course the company got the values on 5th of May. So the company has to take these values in the financial statement on 31st March. It is an adjusting event. Why? Because the evidence of condition was available. So friends, adjusting event are those events which require an adjustment in the books of accounts, which require adjustment in the financial statement. Right? This is known as adjusting event. What is a non-adjusting event? As the name suggests, non-adjusting events are those events where evidence of condition was not available on the reporting date. It arose after the reporting date. And hence, non-adjusting events are not required to be adjusted in the books of accounts, in the financial statement. Non-adjusting events are required to be disclosed in the notes to accounts of the financial statement. For example, there was a fire in the godown of the company on 15th of April. This fire has destroyed 50% of the inventory of the company. Right? Friends, whether on 31st March any evidence of condition was available, आप कह सकते हो कि उस दिन माचिस वहीं रखी थी, right? Can you say that? कि आग तो लग सकती थी. So no evidence of condition was available on the reporting date. No evidence of condition. This fire was broke out on 15th April, right? So it is something where the evidence of condition arose after the reporting date, right? So in this case, but whenever the user of the financial statement is getting a information the user is getting a stale information. For example, I am a shareholder of Reliance. Reliance is closing its books of accounts financial statement on 31st March 2024. Reliance board meeting is on 10th May 24, right? If something has happened like this fire event, this happened on 15th of April. So when I am getting a Reliance balance sheet, I am getting on 10th May and I am celebrating, I am saying, oh, Reliance has a good amount of inventory in its portfolio. But the reality is Reliance does not have that amount of inventory. This inventory belongs to 31st March. I am reading the numbers on 10th of May. Between 31st March and 10th May, the 50% of the inventory, 50% of the inventory has already lost. So as a shareholder, as a user, I need to understand that moment I'm reading the financial statement, there was a accidental event, there was a exceptional event which arose, and due to this, the inventory has reduced to 50%. Right? There was a death of a labor in the factory on 10th of April, and the family is asking for the compensation of the deceased employee. Right? The family is asking for a compensation. So the family has filed a case on 10th of April. So this event arose after reporting date and it is a non-adjusting event, and this only requires a disclosure in the notes to accounts. Dividend is considered as a non-adjusting event when dividend is proposed or declared in the board meeting after 31st March. It is a non-adjusting event which only requires disclosure. Sir, let's say after 31st March, now some special event. And it also talks about a special event, which is dividend, right? Declared or proposed after reporting. It is a non-adjusting event. Sir, what about going concern? Going concern. So the company was a great company on 31st March. Government has announced a decision on 15th of April to shut down the company's operation maximum by 31st December of the current year. So in this case, 31st March, there was no any problem. This decision came after 31st March. So standard says that when there is an impact on the going concern, although evidence of condition was not available on the reporting date, but this announcement has a impact on a going concern. So if there is an impact on the going concern, it will be considered as an adjusting event, right? This is a treatment for the going concern. Adjusting event requires a financial statement. It only requires disclosure in the financial statement. So this was all about, events occurring after reporting period. So friends, I have covered Ind AS 7, Ind AS 34, Ind AS 8, and Ind AS 10. Okay. So now over to you, and my colleague from Board of Studies, Shilpa ji, is also there. So students, if you have any question, so I would request all of you that please unmute yourself and ask the questions. Or if you want to, just ask your question through query link, or you want to ask your question by putting on the chat box, please raise your question in the chat box. I'll read that question and I'll also, respond to that question.
Sir, may I just say something?
Yeah, sure, madam.
Good morning, students. And sir, the queries which you have asked regarding your study material, I would like you all to please post your queries to BOS through BOS mobile app to me, or you can also mail me at shilpa@icai.in. I'll be happy to reply that regarding study material. Whatever queries you are having, you can ask me over there. And with respect to the queries for your May 2024 examination, we would like you all to wait for the suggested answer of a declaration of result. Will be as of now, we won't be able to respond on that. Okay.
Ma'am, for SPOM, to whom I should contact? any query is there. Self-paced online module.
What is the query, Mr. Mankad?
Ma'am, most of the time I am facing the face recognition. It will take almost 1 hour. I mean, or even during the lectures also, suddenly it drops and asks user face does not match.
See,
I was,
once you are entered, I don't think face recognition issue
no,
will
ma'am, it is
arise.
happening. Ma'am, it is happening.
It is happening. So
I
you
am
do
sitting
one thing.
continuously. I am sitting continuously before against the camera.
Okay, Mr. Mankad, just please note down one mail ID. You can talk to that person. It's Anoj, ANOJ, Anoj dot das. I'll just put it on the chat box. Just a minute.
Yeah.
Right now, I'm having the facility of only direct message. Just a minute, huh? Let me
Just,
see.
yeah,
Mr. Pankaj,
repeat the name. ANUJ or
no,
ANOJ?
ANOJ dot
Das.
das, DAS, at ICAI.in. Okay, this is the mail ID. Here you can post a query regarding this, whatever problem you are facing in SPOM. And another is you can also note down the phone number. It is 0120 is the STD code,
Yeah.
3876898.
3876898.
3876898. Anuj will be available on this number, and you can talk to him regarding whatever problem you are facing, and he'll be responding. Okay.
Ma'am, he's heading a technical, this department, because why I'm asking, I have to discuss one,
He's
loophole
from
in the
Board of
system.
Studies, but he looks after this platform.
Okay.
So he'll be able to guide you.
Sure.
If you see on the chat box, he has there's mail ID has been also given, anoj.das at
Okay.
ICAI. Okay.
Thank
So,
you, ma'am.
madam, there is a question which is raised by one of the student, right?
Hmm.
So I've just posted on your chat. So can you please
Just a
answer
minute.
to that? It is related to May 24 exam.
Let me see, sir. Students, that's what I was saying. In case you are having any query related to suggested answer, sorry, for your May 2024 examination, this main examination which has happened, we won't be able to respond on this. But broadly, I would say, who has asked this, sir? The query was placed by whom, sir?
Query was asked by Prerna Sharma.
Prerna, as of now, I would say you need to revisit the solution which you have done. But yes, we won't be able to reply. You can just mail me your query. I'll respond you there. As of now, we won't be able to give you May 2024 answers here. We won't be able to discuss this, but you need to revisit it. Just please go through the solution again. You have to revisit it, okay? Otherwise, you can. I have shared my mail ID also, shilpa@ici.in. You can mail me and I'll respond it. Any other query? You can unmute yourself, students, and you can ask your query.
So one of the queries there, one of the technical queries there, which is asked by Arun Kumar Reddy. What happens if the fire accident occurs on 31st night, whether it is adjusting event or non-adjusting event? If it is happening on 31st, right? So in that case, it will be considered as an adjusting event. Because the evidence of condition was available, the fire was triggered. The only thing, the loss was assessed, after 31st March, right? The loss was assessed, let's say, in the month of April. So it will be considered as an adjusting event because the evidence of condition was existing on the balance sheet date. Raj is asking, just let me read that question. Sir, condition existed at balance sheet date even if management has no knowledge or expected that to occur. Thus, it's an adjusting event. But what if even after approval, they were not aware it would be non-adjusting? So Raj, if I've correctly understood your question, you are asking that one of the event was adjusting event, right? Because the evidence of condition was available. But the management was not aware about that, right? And management has, approved the financial statement as well. Even at the date of approval, management was not aware about that. But the evidence of condition was available. So if the impact was material and the management found that management found that even after approval of the financial statement, some regulator, some stakeholder, or even the management itself found that the impact was material, and it has materially make the financial statement not reflecting true and fair view. These financial statement needs to be refiled, or the board meeting has to be rescheduled, and again the correct financial statement needs to be filed. Okay, so this is the kind of a guidance which is there for this non-adjusting event. So for this adjusting and non-adjusting event. Any other question? Raj, I hope I have answered your query.
So
And Raj,
suggested the
for
question is not available on portal.
Sorry, come again.
Suggested answer are not available on portal right now for May 24. Actually, the question is from Ind AS 34, so I just want to discuss because I have solved it, but I'm not sure whether my answer is correct or not.
Prerna, what you are asking is your May 2024 examination question, na?
Yeah.
I'll do one thing, sir. We can discuss the question here. I'll just share the screen of the question paper and put the question here in front of you. If you want, you can take it up, sir.
sure,
Do you want? Should I do that, sir?
you can do that, madam.
Just a minute, sir. Let me just open this. I'll share the screen. Just a minute.
If it is a small question, we can take up right now. If it is a big question, I think we can revert through the mail.
It's a small question, but it is similar to what is given in the study material, Prerna. It is not different question, but still, if you want, in the study material, all the adjustments are given in different questions. Whatever there are 3 or 4 points in that particular question, and all the questions are given in different different illustrations of the study material. You can go through that, but if you want, you just give me a time. I'll open the question paper and share it on the screen.
In the meantime, Raj was asking, there was a topic of dividend payable by non-cash consideration. Raj, first of all, if I talk from the cash flow perspective, if it is a dividend which is payable by the non-cash consideration, it will only form part of the disclosure in the cash flow statement. It will not come into the cash flow statement. Number two, if I talk from the adjusting and non-adjusting event perspective, so dividend payable or dividend proposed after reporting date, it will always be non-adjusting event and only requires disclosure. Which question, madam?
The C
Question
part.
of Dhruv Limited? C part. Okay. Dhruv Limited, a production company, sells television to various companies all over India. Company's financial year ends on 31st March for the 31st March. For the financial year 22-23, the company had a net profit after taxes of 2.4 crores. Okay. It prepares and publishes an interim financial report for each quarter of the year. The net profit of the company for the second quarter of 23-24 is 56 lakhs. Okay. Yes. So for the quarter, the profit is given at 56 lakhs. Following adjustments are to be made while computing the net profit of the second quarter, right? The company has a practice of declaring bonus of 5% of its profit after taxes of previous financial year. It has a history of doing so, and the amount is recognized equally in each quarter. It declared bonus on 1st June 2023, but recognized the full amount in second quarter. So the company has a practice of declaring bonus, right? And what it has done, it has a history of doing so, and the amount is recognized equally in each quarter. For example, let's talk about the concept. For example, salary. I know that if I have hired an employee, I have to pay the salary throughout the year, right? So I am accruing salary on a quarterly basis, on a monthly basis when I'm paying to the employee, right? On an accrual basis. And to the same employee, I know that, let's say the salary of the employee is 10 lakh rupees, I'll give him a bonus of 1 lakh rupee as well, right? So in that case, Prerna, I know that I'll pay this 1 lakh rupees bonus, although after 1 year, but going by the accrual concept, what should have been done? whether the expense has to be taken at the end of the year or expense has to be accrued over the year.
Over the year?
It has to be over the year. It means if the company has recognized this entire bonus full amount in the second quarter, is it right?
No. No.
In that case, you have to make an adjustment, right?
But adjustment would be like 5% of 2.4 crores, like profit of previous year. That will be around 12 lakhs. 12 lakhs for this is for second quarter. Will I adjust for first and second quarter or only second quarter? Like 9 lakh or 6 lakh? Which is will be the amount?
So since you are declaring the result for the second quarter, in the second quarter, accrual should be limited to the second quarter only. In the second quarter, right?
Okay, so the adjustment will be of 9 lakh, like 3 lakh per quarter. So
So
for
whatever
three,
is the amount, whatever is the amount. Right.
okay.
What is the next? So madam, can you please go next? Yeah. The company intends to incur major repair and renovation expenses, major repair and renovation expenses for the office building. For this purpose, it has started seeking quotation from vendors. It also has tentatively identified a vendor and expected cost are 34 lakhs. It provided for the same in this quarter.
It's
First of all, First of all, if you see the question number 2, the part 2, the company intends to incur. The company intends to incur. The company has not yet incurred. Right? Number 2. So first of all, the event has not been occurred. The company is thinking that I'll incur some major repair and renovation expenses. That is number 1. It has not yet incurred. Number 2. It talks about major repair and renovation expenses for the office building. So it is moving towards capitalization. It is moving towards capitalization. In Ind AS 16, the concept is if it is a major repair and renovation, it could be a case of capitalization, right? So the event has not yet occurred, first of all. And since the company is identifying a vendor, getting a quotation from vendor, and just in anticipation, the company has booked the cost of 34 lakh, which is not right. So which means that this requires an adjustment, right? The third one is exceptional loss of 4.2 lakh incurred during the second quarter due to worker strike. 50% of the exceptional loss has been deferred to the next quarter. Now the question is, when the event has happened in the second quarter, and this exceptional or abnormal loss belongs to the second quarter. So expense has to be taken to the second quarter. You cannot postpone or you cannot defer the expense, right? I
Yes,
hope
sir.
all these 3 adjustments are clear to you, Prerna.
Yes, sir. Thank you.
Okay. Any other questions, students? Please let me know if you have any other question. Any question from Ind AS 7, Ind AS 34, Ind AS 8 and Ind AS 10?
Uh, can you discuss the illustration 12 of cash flow statement from book?
From where?
Illustration 12 of study material, cash flow statement.
Which
Only one
latest
topic that cash flow
Okay.
statement, illustration 12 from study material. The
Okay.
only topic that we were discussing about financial asset, right?
I'll
Sure.
share the screen, sir. Just a minute. I'll
Sure.
share the screen.
Sure, madam.
As there was nothing specified, you mentioned to be taking in operative, but without making any note, the ICAI material is taking it in financing rather than incorporating in operating.
Okay. See, Raj, there are dual practices available. So let me look at that study material first. But as far as other financial assets are concerned, so if nothing is given, right? So in that case, either you can take it to operating or you can take it to investing. Even if you take it to operating, the answer will not be wrong. But the only safeguard, the assumption is just to safeguard this thing, you can just put a note that in absence of the particular information I have considered this as a operating activity. Both the practices are prevalent in industry as well, right? Because even if you read Ind AS 7, it does not gives you any guidance that whether the financial asset would be operating or would be investing. Yes. Yeah. You are talking about this non-current financial asset?
Yes,
Raj?
sir.
Okay. So in this case, so let me, without looking at the answer, let me tell you why ICAI guidance, why ICAI solution is on investing activity. Let me put it very upfront with you. So, madam, can you please go up on the balance sheet itself, because I understood what he is trying to say. So, Raj, if you will see this non-current asset item, and if you will refer the line item, property, plant and equipment, investment in associate, and financial assets. And I believe the breakup of financial asset is not given in this question, right? Correct? So the breakup is not given in this question of financial asset. The only financial asset is given in this question. If you look at all these two items, all these two items belongs to investing category, right? And this is a non-current financial asset. So the best presumption which is taken, right? This financial asset is also for the long-term purposes, right? Either this could be in the form of other asset, it could be in the form of other investment, right? For example, fixed deposit for more than 2 years. Yeah, and I have taken this example in my session also, during the session. If it is a fixed deposit which is for more than 1 year, be it 2 year, 3 year, 4 year, it will come under financial assets, other financial assets, right? So, but that fixed deposit will be considered as an investing activity. Okay. So in this question, the most appropriate line item is investing activity, because it is coming in non-current and along with these investing activity items. And that is why the ICAI study material has not put it specifically that why we have taken this in investing activity. But the point is, in your examination, if you are reading this financial asset, there are a lot of line items, and you are not clear whether it is investing or it is financing, investing or operating, you can just put a note that I am considering or I am assuming this financial asset would have line items which is operating in the nature and taking it into the operating activity, right? So in my view, if you will put this note, probably your marks will not be deducted, at least for this particular area, for this particular item, right, Raz? Is that clear?
Yes, sir. As in this question, only operating is calculated, so there is no adjustment of investing or financing activity. The
Understood.
answer would not
Understood.
match in that case.
Understood. That is why I told you, even I have not gone through the solution.
No,
I
I'm
was
just
on
asking that I
the
could give
question
an
only.
alternative solution with that, with both the assumptions.
See, if you have time, you can do that, right? So over disclosure will never be, harmful. If you have time, you can do that. If you don't have
It
time,
would not be
probably
wrong. No? That's what I'm asking. If I give both the solution, would one be disregarded or both be rechecked? That's the question.
I don't think so. Shilpa ji, would you like to make a comment on this?
No, in case you are giving any assumption, and if that assumption is valid, that will be definitely taken care of.
No, it would be not like that. I am giving both the solutions, and it would be like check any of them. So
No. In case you are giving both the solution, it will be considered.
okay.
It will be considered. Okay, Prerna is asking something. Let me see, sir. She has answered. I'm unable to download PDF of question that were discussed in last AFM live lecture. Can you please share from where I can download? Uh, for AFM, now I'll pass your query to the concerned faculty. Otherwise, you can put a mail also to me. I have shared my mail ID, or on BOS mobile app. You can ask directly to the AFM faculty also, whatever you are having issues. He'll respond. He responds to the students' queries. Na? So don't worry for it. You can mail me also, and I'll forward it to the concerned person. Students, in case you have any other query, please do ask. We still have 2 minutes, otherwise we'll wind up the session.
Ma'am, one more thing I would like to add, that the chart which is made for summary of subsidiary, as I have mentioned.
Which charts, sir?
In study material, there is a chart of summary of subsidiary, whether subsidiary and associate investment in associate and subsidiary, whether it's investing or financing.
To me, for chart you have some sense to take also to sir. He has forwarded me. Just please mail me that. I'll go through that because exactly I'm not able to understand what you are saying. We'll discuss it over there. Na? We'll
Okay,
discuss it over there. You just mail me at shilpa@icai.in and put your mobile number also there. In case something is required and we need to discuss over the phone, I'll call you back.
Okay, ma'am.
Okay. Any other thing? Sir, we may wind up then.
Question, then we will be happy to conclude the session. So thank you so much, students. And I hope you have gone through with all the recorded videos on Ind AS 34, Ind AS 7, 8, and 10. If you haven't, as of now, I would request all of you that please go through with all those 4 videos and then please listen this video again, right? Because I've tried to cover all the broad pointers, all the, all the important aspects of all these 4 standards, right? 34, 7, 8, and 10. And while after listening the particular videos, when you come to this particular video, probably you will have a good amount of revision, you will have a good flavor, and you will be able to memorize the concept. So thank you so much, students. Have a good day.
One more thing. Sorry. Hello. So just a minute.
You are audible, madam.
One more thing, students, for next query session, we have already informed what are the topics which are on what we are going to have a query session. That schedule has been uploaded. Please go through that and come well prepared. After seeing the recorded lectures, then only you'll be able to get the benefit of these recorded these live query resolving sessions. For next session, I believe it is AS 16, 40, and 38. On these 3 topics, we'll be having a query session on next Saturday. So we expect you to go through all these recorded lectures on these 3 topics and come well prepared for that. Okay. Sorry, please repeat one stop. Okay, the topics are Ind AS 16, that is property, plant and equipment. Ind AS 40, that is investment property. And Ind AS 38, that is intangible assets. Okay, on these 3 topics, we'll be having a query session on next Saturday. So go through the recorded lectures of the previous batch that is available on your BOS knowledge portal as well as on BOS mobile app also, and along with the notes. Sir has only taken the class in the previous batch also, so he will be that all the assignments, whatever is there, that is also uploaded. Please go through those lectures and any queries you have, you please note it down and we'll resolve it next Saturday. Okay. So thank you, students, and all the best. Over. Hanji. Yeah.